Welcome back to the Investing on a 9 to 5 podcast. It is your boy, the Dividend Dog, and Paul, options underscore legacy, will not be in the house today. He is out at his wife's birthday. So happy birthday to Paul's wife out there. But on today's video or podcast, we have special guest SCHDStan in the house, and we'll be going over just his journey on accumulating, my favorite ETF, SCHD, and I'm also interested in hearing, what else that he has in his portfolio, and then we'll just talk about some other things that's been going on into the market and what we have on our watch list coming up for this week. Welcome back again, guys. It's Sunday scaries out there for some of us, but Monday will be a good day. Got to start off on a positive note. And here we are on the 9 to 5 podcast. We got Stan here, and I'm going to pass the baton over to him so he can introduce himself and talk about, once again, our favorite ETF, SCHD.
A lot. Thanks for inviting me on. I really appreciate it. I've listened to your show a few times and I enjoy it. I follow you on Twitter. And, first off, I just want to say, just how great this community is on Twitter, especially the dividend investing community. It's been so welcoming. I do a couple shows, and next thing you know, I'm getting invites on to more and more. So it helps that, I'm talking about something that most dividend investors are really interested in, that being SCHD.
Yes.
So, I've loved this ETF for a long time. It was actually the first stock I ever picked on my own, like outside of a retirement account. And,
Okay.
and I got, it was a little bit of luck, a little bit of I wanted to be really safe at that time. I wanted to stick to an ETF in the beginning. Mm-hmm. And it's funny, what I learned over the years is that, wow, that first choice, just being smart and safe, was such a wise decision. Because I went on to invest in, all sorts of other things. And I've heard you guys talk about, you try the growth stocks and you try the speculations and you try the SPACs and you try day trading, you try all these other things and you learn from all that. And then at the end of the day, I go back and I look and I'm like, wow, look what SCHD has done in the time. I started in 2018. So if you look back at the history from 2018 until, 21, 22, that's when the huge growth happened. I mean, for everybody, really. I mean, it was a good time to invest. So that's part of it, right? A lot of it just luck. The time in the market there just really worked out well. But as things started coming down in, the end of 21 and 22, I started seeing how well SCHD was holding up. Even in 20, all through 21, I was, as there was a lot of fear about, okay, when is this bubble going to burst? Is there a bubble? Is there not? SCHD was just steady, chugging along, and that the dividend was growing, and it's just, I'm like, wow, this is something. I'm not afraid of a bubble bursting on these type of stocks, the dividend growers. Like, these things are solid. So then I just looked at it and I'm like, man, if I had put all that money into SCHD, where would I be right now? So I really made a decision in 21, while things were still flying for everybody, to say, my future investments are really going to focus on this ETF in particular, some other ETFs as well, and some really solid companies that I can really understand and easily follow, and stuff that I've really done with my own work. And it also has the backup of other people, just really getting into it. So I spend all this time really learning. And what I've learned is that I have so much more to learn. So until I'm really, really good, I don't want to take a lot of chances on something that other people are really into until I understand it. So I've done a few of those. I've made the mistake. You know what I mean? I've made that mistake and said, wow, these people really love this. Let me just buy a little. And even that can be dangerous, because you buy a little, and I'm the kind of guy that when it goes down, you're like, okay, well, it's cheaper. Let me buy more.
Buy more.
Let me buy more. Let me buy more. And then all of a sudden you've got a big holding. It's something you don't even understand, right? And I'm like, oh my, and then you start getting nervous. And luckily, there was a time in 21 where it didn't matter. Every dip went up, and it worked out. And the bad thing about that was that it taught us some potentially bad lessons, that, everything's always going to go up. And that's not always the case. Over the long run, yes, but there are stuff that doesn't go up. There are
Right.
stuff, some of the like more speculative, like SPAC stuff that, it'll go up again, but it may never reach or take a really long time to get back to those really high flying days. And
Like
some of those
it's
companies
like
aren't going to
Neo.
make it, right? What's
You ever
that?
heard of
Yeah. Like think about all
Neo?
that. Like, yeah, I tried all of that stuff. And some of that stuff I'm still holding on to, right?
Mhm.
So yeah, now going forward, I've said, you know what? It feels good every time I buy SCHD, almost regardless of price. But on top of that, because I follow it so closely, I really found when it's in a good range to buy. So I've got a good
Noticed
strategy that
that.
works for me
I've
to
noticed that on your Twitter that you have your strategy on purchasing SCHD. That was going to be one of my questions for you, but it's perfect
yeah,
that you right
yeah.
into it. Go ahead about it.
Yeah, so what I look at is I just see the ranges, right? Like you just look at any month. You look at any month and you'll see that any stock, and but in particular SCHD is moving between, maybe some months it's $5, some months it's $3. So, and there's nothing wrong. It's actually recommended for most to just, DCA, pick a day, pick an amount and invest consistently all the time, whether it's a weekly, whether it's monthly, whatever you want to do. There's nothing wrong with that. And most people should do that. But like I said, because I follow it closely and because I've seen the way it trades, I can pick, let's not invest when we're at 78, because in the same month, it can be trading at 78 and be trading at 74,
Right.
72, all the way down to 70 and even below. So
Mhm.
you don't want to get carried away. You don't want to wait too long and never invest. But I always look at it on a weekly and a monthly basis. And one of the
Okay.
things I always talk about is I'll look at the 5 day range and I look at the 5 day low. And I don't like buying unless it's under the 5 day low, or unless we're like in a range where we're like over the long term, we're below. Like
Mhm.
right now, anything for me under 74 is usually a decent time to buy with this
Oh, yep.
particular stock, right? And this is for now. This is what is it? It's April 2nd right now,
Mhm.
2023.
Yep.
In the past, in the future, this could be totally different. But right
Mhm.
in this moment, 74 and under is a nice place to be. And where it's been lately, we've been in the low 70s and we even touched into the 60s.
Yeah, we did
And
touch 69. Mhm.
yeah, and and it's funny because as it's coming down, like 22, 23, this year hasn't been a great year for SCHD. We've been dropping a lot. So that makes people nervous, right? And then everyone talks
Yeah.
about, oh, if it gets into 72, 71, when was that 77? Oh, I'm backing up the truck. I'm backing up the truck.
Right.
And I had to remember that too, because I'm like, wow, there's other people, as soon as it starts dropping, oh, this thing's going to 58. This thing's going to 60. And it's possible. It
It is
definitely
possible.
can.
Yeah.
It can. If you look at the charts, there's some room
Mhm.
there. But what you can't forget is I told myself, if this thing goes below 70 again, I will back up the truck for what I can afford at that time, right?
Okay.
And it got under 70 and it looked like it was going to go to 65. You just get that feeling and
Mhm.
everyone's saying, "Oh my God," and the
Yeah.
fear of the banking crisis going on, the
And it's a majority of,
what they're
we got it's heavy financials too, so it's like, yeah, it's in
Yeah.
there.
So there's a lot of fear. Oh, and then there's talk of, Schwab having trouble with the financials, which is,
Mhm.
who knows? I think it's unlikely, but it's always possible. You never know what's going to happen, right? We didn't expect all these other banks to fail. That kind of happened to Blue. The experts were saying, "Hey, this bank is fine," and then all of a sudden, boom! And then the experts come out, "Oh, I knew it. I knew it." Well,
Of
a lot
course
of
they
people
did.
didn't, and yeah. um, so the fear is there, but I had to remind myself to stick to my strategy and say, you know what? I know whenever this thing in the history, whenever this thing's got under 70, it's an amazing buy, and
Right.
it usually returns pretty quickly.
Mhm.
And now here we are. What 2 weeks later? Maybe I can't remember exact date at the time, but I think not too long ago we were at 69, and now we're up to 73. Within this week, we went from 70,
I'll take a look.
almost 71, ended the week at 73. Just like
Yep.
that, we're back in the
That was
70s. And say, you know
122.
what, in another week, we might be back down.
Mhm.
There's no saying we're not going to go back down, but this is what I've seen over the 5 years of following this stock.
Right.
So I've learned that range, and that's the way I look at my other holdings too. Is that I'm following it. I'm spending the time. So I do look at that. You
Mhm.
can get some really nice gains when you buy on kind of the fear days, the red days, the
Yes.
when good companies are
On
going
sale.
through some times, as long as it's not, you always have to weigh it. There's a thin line between, is this just fear and are they okay in the long run? Or is this something really drastic that has changed and this company's not going to be the same? Even if it's not failure,
Mhm.
is it like, has something like drastically changed the way they're going to make money? Has something come along and they don't have that advantage they used to have? And that's tough. That's really tough to figure out. So another
Yeah.
reason why I invest in something like SCHD that's got 100 different holdings. It uses those fundamental screens to determine what's going in. So it looks at
Mhm.
cash flow, it looks at debt. It does all these things that good value investors
And
do.
years
It
of
does it
dividend growth
all.
too has to be minimum
Dividend
10.
growth, exactly. It looks at that. It even has a filter on there that looks at if a dividend's been cut, it'll drop that stock in that month. It's like a special
Oh,
screen. So,
really? I did not
and a
know
lot of
that.
people don't realize. Yeah, a
Oh,
lot of people
wow.
don't know that.
Well, we
So
had you
every
on. See, guys?
yeah, every month it reviews for that. And so if a stock does cut its dividend, it's out. So I get that question a lot. Like, do we have to wait till the quarterly rebalance or the yearly reconstitution to get rid of those ones that have cut? But no, it's a monthly review.
Wow, that's
So
good. That is awesome.
yeah,
Do
yeah.
all
So, and it's a
ETFs have that,
dividend.
or is it just like certain ones?
No,
Wow. Okay.
no,
So
there's every ETF has its own way
exclusive.
of screening stocks, and doing what I've found is that SCHD is one of the most thorough. Like some of them are very basic. It's like, let's just pick the highest dividend yield out of the S&P companies. Like
Yes.
two screens.
Hmm.
Other ones like a VYM. It takes a certain index and then takes the top half of dividend yields, and it works very well. I love VYM too, but
Hmm.
it's when you look at it, it's pretty basic. It's worked. It's got a great history. But if you look at the dividend growth and you look at the yield, you look at the price performance, SCHD has done a lot better in the last
I
5 years.
agree. And that's one thing when I've looked at VYM when I first started investing, and then I saw SCHD on ETF.com, and I'm like, wait a minute, this has got way better companies, and they have the metrics that some of these ETFs
Yeah.
don't have. So that's why I instantly like fell in love with it.
Yeah, you're big on it too, right? Like you've got into that. Is that recently for you that you've found it and got into
Actually,
it?
it was SCHD was probably my second or third stock that I bought in the market when I first started
Yeah.
investing. It was more, it
Yeah.
was like AGNC, ET, and then I like found SCHD and like then fell into VTI. But at the end of the day, I've kept ET and SCHD as like cornerstones of the portfolio. So I love this ETF. I think it's great.
Yeah.
I think it's right now it's at a perfect time to buy. And I know you see us on Twitter with the 52-week SCHD challenge. So
Right.
trying to motivate as many people as possible to put as much as they can every week into this powerful ETF, because you've seen the success from 2018 until now, and so you understand how powerful this can be when it runs,
Yeah.
and you have a system set up to know how to buy it, and you've had success with it. So what did you think about the reallocation with
Yeah.
that they just recently what they just recently went through?
Yeah, so that's a yearly reconstitution they do. And
Okay.
before I say like just how I feel about it, the way I look at it is I like that it's done. It's not done by humans. It's not based on opinion. It's not what's trending. They have their rules and they follow it. And bottom line, that process has worked. So really, I trust that process.
Hmm.
I can get into my individual feelings, but the reason why you invest in something like SCHD is for the process. That's the way I look at it, and I think most people should. You should really understand that process, and you can pick stocks on your own if you don't like the way they're doing it, right? Or
Hmm.
or make up for something. Go find something else. You need more yield. You need more growth. You need whatever
Right.
you need. Add that in yourself. But for what they do, let them handle it, and it's worked. So a lot of people complain about this or that, and you know what? It's okay. We're in
Yeah.
this for a reason. let
Yeah.
the process work out. And even if we don't see it today, like, some people are fans of Ford and some aren't. I think you're a Ford fan, right? I've
Yes,
seen
I'm
that.
into the EVs. Yes,
I,
and I think
I remember we had a little chat when it happened. You mentioned you like the AppV and the Ford move. And
yes.
there's a lot of other people that really didn't like that move at all. And I'm like,
Why is
well,
that?
I think some people just don't like the car industry to begin with. It's had
It
its
is
ups
very
and downs.
cyclical. It goes up and down, and but I think they're gonna catch on with this EV, trending. That's,
Yeah,
that market is open right now, to
yeah,
take.
yeah.
Um,
And I like if it
paying the dividend.
if you see it as a little bit of a if someone does, not necessarily you, but if somebody sees it as maybe, okay, this is a bit of a risk, but it has a nice dividend, it's got a potential for some great growth if it really hits with the EV. It's, not a massive chunk of SCHD. So if it does well, you're going to gain from it. If it
Hmm.
doesn't, the beauty of an ETF is that it's going to come down in the percentage of the holding if it's not performing well. And then over the years, it will drop out if it's not continuing with good fundamentals with an ETF like SCHD that is constantly looking at those fundamentals. So I see no problem with that. It's great to take some chances. And something like, some people don't like kind of like the staleness of a Verizon, right? But Verizon's got a great yield and it brings up the yield for the whole ETF. And then it's
Yeah,
got all the other, it may not have the growth, but SCHD, if you look at the other guys in the top 10, they've all got amazing growth.
AbbVie.
And exactly. And one thing I'll tell you about, so in the end, I didn't tell you how I feel. I do really like the changes. So once you get into the changes, you
Hmm.
know, um, there was a guy who did a video the other day. His name is Robbie Money. His channel's on YouTube, Robbie Money.
Okay.
And on Twitter, he's Stock Street Blog. And
Okay.
I retweeted one of his videos the other day, and I took out some of the facts from it. And he mentioned when you compare the stocks that went in versus the stocks that went out. So the P went down from of these new stocks. It went down from 17 to 13, right?
Okay.
The Ford P's went down from 12 to 11. The yield went up from 3.6 to 4.83. That's significant, right? Now, this is just the ones that are in and out. This isn't the whole
Right.
ETF.
Okay.
And
Okay.
hear this too, the earnings per share growth went from minus 15 to a plus 2.7, right? And then the forward EPS growth is a little down from 12% to 7.8, but that's still a huge, when you look at you combine like the forward and the existing earnings growth, that's still a huge positive. And if stocks
Yes.
are down more, they have more opportunity to grow, and that's based on
Exactly.
that.
And that's going to help push
So
the ETF.
yeah, and so you look at the numbers, you look at just face value of the stocks. There's some great moves happening. The
Hmm.
the overall yield looks like it's going to be higher. The newest dividend numbers are higher for just the most recent dividend payout, which has nothing to do with the new constitution yet.
Hmm.
That'll come. We'll see that later on. But we're already up, another what we gain another 10 cents. There's about 10 cents, I think, this quarterly dividend payment. And yeah, things are looking good. Like
Yeah.
another thing I look at is like the average like 10-year yield, where it's been in the past versus where it is now. And I don't have it in front of me. I probably do if I look, but to save time, I think it's in the like 2.9 or something like that over the past 10 years.
10 years,
And now
2.9.
we're looking at, yeah, and now we're looking at 3.6. That's a huge
Wow.
difference.
That's
And
huge.
right. And I always look at my whole entire dividend portfolio yield on cost. And my
Hmm.
yield on cost is about 3.6.
Okay.
And so one of the things I aim to do is try to buy. Another thing I look at, like another filter I look at, is what's the yield right now I'm going to get on SCHD versus my yield on cost.
On cost.
And when
Right.
I'm in that 3.6 range, that it's a great place to be. Like amazing,
Yeah.
it's at where I'm at, and if it goes any lower,
That's
we're at
even better.
$73 and it's 3.6. So there's a good chance we're going to come back down. We could. So anything right now below, like I said, like 74, 73, you're in that 3.6 range. And so there's I don't know if you've ever heard the dividend yield theory. It's basically it's looking at past yields, and
Mm-hmm.
that trend going forward, the yield acts like gravity, and it'll your stock price will move to get back to where the yield has been in the past. So to get back to a 2.9 over the
Yeah.
past 10 years, you're going to increase the price of a dividend yielding stock, a dividend growth stock.
Okay.
So I wish I had it in front of me, but you can do the math on it. Listeners can do the math, but that gets you up to like high 70s to get back up. No, actually, tell you the truth, I think it's in the 90s to get back to a 2.9. And
Oh
it's just a
wow.
theory. It
I
doesn't mean
see.
it's going to happen.
Yeah, but
But
I
you
see
look
how
at
how
the
the inverse works with it.
you just look at the difference between the price now and the like that possibility. Even if we only get halfway there or a quarter of there, that's still a nice gain, right? And
Yes.
that's over long periods of time. We're not, somebody's going to look at this in a year and say, "Hey, you're nowhere close to that
Oh
90."
yeah. Yes.
But
None of
we're talking
they
10
know.
years. The next, this is a long-term thing. I tell people ask me, "Should I buy now? Should I buy now?" And it's not advice, and it's I look at it like, what, we could go down another 10 from where we are today, 10%, and be
Hmm.
ready for that. If you're not ready for that, don't bother. Don't bother
Yeah.
investing at
Yep.
all.
Don't even come test the waters.
No,
But if
it's a
it does drop
long-term thing.
10%, that's gonna make me really excited to buy it.
Right. Right. Yeah.
Awesome. Awesome. So, moving obviously with SCHD, you say you is that your only ETF that you've been just accumulating a lot of shares in, or what's your second favorite ETF? That I know I
Oh,
haven't seen you
second.
talk
Well,
about what your second favorite
yeah.
ETF you, that you own.
Yeah. Well, it's got to be like an S&P index. Like,
S&P? Okay.
yeah, for me, you look at the track record of an S&P
Yes.
index, and like over time, and for as far as like a safe way to do it and to like set it and forget it, like nothing beats that. And you can put tons and tons of work in and maybe beat it, maybe, probably not. So for that value for your time, and nothing beats that. Like, so that's another reason why I got into SCHD, because in my 401ks, and I'm actually Canadian, I live in the US, so I have
Okay.
an RSP in Canada. I live in Florida now, but it's pretty heavily into the S&P. So I did want to do something that was different. And another nice thing about SCHD, I'm always going back to it, is that
Mhm.
it is different from, you know, there's some overlap, but you're really getting a nice diversification with the combo of an S&P index and SCHD. So
Agreed.
it really works well.
Hmm.
I've got some other ones too. I like VYM. I like, Degro, Vig. Those are some
I
other
like
ones
deep
that are
growth. Hmm.
all nice. Like, they're nice alternatives too. And then I've also got into looking at something I don't hear a lot of people talk about, is something called SYLD, which is
Ooh.
it's a buyback ETF. So it focuses on not just, it looks at dividend yield, it looks
Okay.
at share buybacks and also debt repayment. So um, and that gives you a combined shareholder yield, which, if you look into it, has performed like beat the S&P over the last 5 and 10 years. And it even beats SCHD in stock performance. So it's something I'm starting to build a position in. And
Okay.
for listeners, like, look into that type of investment, like shareholder yield.
Agreed.
Like, do your research on that. It's really interesting
Yeah.
because it looks at that total, like, what are companies doing? Like, some companies, instead of paying a dividend, they focus on buying back shares, and it's really the same sort of thing. Like, we as shareholders, we get the same sort of value out of it,
Hmm.
but you do save on not having to pay the taxes on the dividend, so there's some benefits to it too. And then you look at something like that looks at all of it, looks at the yield, and the debt payment, and the share buyback, combines it into like one number, and then focuses on the companies that have the best shareholder yield. You
Yeah.
do pay a little bit more. It's an active ETF, so you pay a little bit more for it.
Okay.
Um,
It looks like it
so
closed out
there's
here up 4% after hours on Friday. Went up 61.29.
Yeah, it's been down. So it had a nice bounce back. Yeah, it went down with the crisis, like everything that's been, the scares with
Yes.
financial crisis. It was a
Hmm.
great time. It still is. It's still in a good range right now. But it's and you look at the holdings and you're like, what? These are like boring companies. Like, who are these guys?
I know Nucor. Nucor is
Yeah,
a great company, great dividend company. I actually owned
yeah,
them for a minute. When they were in like 108, 105. What are they at now? 154. Yeah, I
yeah.
got rid of them. Got
And
into.
that's one of the ones I owned it too, and it did so well. And and it was when I was buying stuff not based on knowing the company as much.
Yep.
So when it popped, I sold it. Like it was doing so well. And I'm like, oh wow, I've seen other stuff tank. Let me take this
Get
money
out of
while I got
it.
And then I learned later, I'm like, this thing is like, I believe it's a dividend aristocrat,
Metal
Nucor,
company,
right?
right? They make
Yeah, they're a steel company.
steel company.
They're
Yes,
one of
there
the
we go.
best steel companies around. You
Hmm.
know, it scared me. It scared me because Jim Cramer likes it. So I'm like, I don't
Uh-oh.
know.
Yep. Get rid of anything that comes out of his
you know,
mouth. I hope
but
he
the thing
doesn't
is,
about stocks.
the thing about him is he's not always wrong. He's wrong a lot, but
Yeah,
people are
that's
hard
true.
on him because who else is out there giving his take every single day? Every day.
On
But
TV too.
right. And every stock that somebody asks him about, he gives his opinion. So of course he's gonna get a lot wrong. And whatever. It is what it is.
It comes
But
with the
I've got a
market.
love-hate relationship with him because he steered me wrong in a lot of ways too. But that's my bad for listening, right? So I was
True.
young
Yeah.
and a young investor, not necessarily young. I'm not as young as I look.
Uh-oh. What do we got here?
I'm
Let me.
47 actually.
Oh, you're young.
Yeah, I'm young. I'm not
Yeah.
but I'm
Yeah.
not in my 30s anymore. I'm closer to 50 than I am to 30. So I'm
I'm
getting up
closer to
there.
40. I'm just kidding.
Yeah.
Awesome, awesome. Well, that's awesome that you're in Florida. I'm actually in Atlanta, Georgia.
Oh,
So
nice. I'm heading there this next in the fall. When we go? Next year I'm going there.
nice, nice. It's awesome up here.
Hmm.
Lots to do. Good food,
Yeah.
good sports.
Yeah, I'm really looking forward. I haven't been there since I was a kid, so I'm looking forward to it.
Oh yeah, go
Yeah.
out to go out to
So,
the Battery. What's that?
what's it called? The Battery?
Yeah, the Battery. It's out where the Braves play at, but they have like all types of like restaurants and stores out there, and they like a couple whiskey places, whiskey tastings, and it's always packed.
Nice.
So yeah, it's pretty
Yeah.
live out there.
Great. I'll look into that. Were you
Heck yeah.
asking about did you ask about individual stocks as well?
Yeah, yeah. What's one of your favorite individual companies that you own? Because it sounds like you
Yeah,
do
I
a
love
dive into, obviously into your ETFs. And then obviously, with you having a couple of just stocks in general. So that means that you take really deep analysis into owning those, like knowing not just what they do, but like knowing their metrics and technical analysis. What's one of your favorite stocks that you own?
Yeah, I'm a big fan of like Costco, Apple, Microsoft, MasterCard, Visa, McDonald's, Lowe's,
Okay.
VT is a nice one, Pepsi. There's a few that I really like. Robert Half is another one. It's a smaller one. They're
Is
like
that
a
a
staffing
technical
company.
staffing company? Funny that you
Yeah.
mentioned. I actually applied to a couple positions there a couple years ago at Robert Half. I didn't know they had a good stock. That's good to know.
Check it out. Check it out. They've
Okay.
got great dividend growth. Their return on invested capital is something I look at big time. Their
Okay.
return on invested capital, I think, is in the 50% range, which is
Wow.
like outstanding. They've
Yes.
got, and my only fear is just like, where is the staffing industry going in the future? I
Hmm.
think it'll be around for a long time, but that maybe I need to talk to someone in the field to make sure, I really understand that. And I would invest even more heavily. It's not a massive position, but I would like to make it once I
Okay.
understand like what the future of staffing companies is looking like, because the metrics, the fundamentals for Robert Half are incredible.
Nice.
Really good.
Okay.
And I
Yeah, I'm a
like, you see the kind of companies I like. Like I've learned after investing in SPACs and stuff, I like solid Apple, Costco, Visa. They're
mhm.
just incredible. And what I do with them is I sprinkle them in and I
Uh,
look at when is their fear, when is their pullbacks, and I
mhm.
only buy usually when they're really down. And otherwise I just invest in the ETFs. That's what I try. I still take
Yeah,
chances
and
every
it's
once in
it's
a while.
yeah, and it's simple and easy what you're doing, and it's working. It's a proven theory. It's written in books that buy when it's low, sell obviously sell when it's high, but buying really good companies when they're undervalued or on sale is really when you take advantage of the
Yeah.
market. So no,
It's
no, no,
easier said than done because
agreed.
when they are low, like people always say it, but they're low for a reason when they come down, and it is scary. But when
Hmm.
it's Costco or Apple, Visa, I mean, I have invested in Costco for years. I haven't invested in Costco since 2019 because they've been doing so well.
Yeah, that
There
stock
was a
is
chance back in like last year in
mhm.
March or something, it came down to like 400, and I didn't pull the trigger because I was just like, what is happening right now,
Right.
right? And there you go, I missed out. Now we're back up, I don't know, 470s again.
Yeah, man.
So it's
It's
tough,
like
man.
Ulta, man. That's one stock. I wish I owned Costco and
Oh, I
Ulta.
love that one.
I wish
I
those are
got
two
into
stocks
Ulta.
that I wish I could own right now.
I got into Ulta last year in like October when everything was down. So
Mhm.
happy, wish I bought more. It's
Uh,
incredible.
yeah, it
It's
is. I just
Yeah.
watch it on the stock. I'm like, look at this thing go. Every time I walk by it in the mall, I'm like, look, there's the best performing stock in the stock market right there.
And and my wife and kids, I've got two girls. They're young, but my
Mhm.
daughter's 11. She loves Ulta already. My wife loves
Uh-oh.
it. She
I'm always
she is great for stock advice. Is this My wife is a expert shopper, expert shopper. And so like if she likes something, good man. It's good.
Thank you. Awesome, awesome. Well,
Hmm.
I'm glad that you were able to give me a couple of, talk to me about some options and about what's in your portfolio as far as like single stocks. And I'm glad that you were able to join us today here on the 9 to 5 podcast, for us to go over SCHD and, get to know you more as an investor and your journey along your SCHD journey, and just also give our viewers out there some, more validated, serious information to let you guys know that SCHD is a serious ETF. I definitely know he has way more shares than probably all of you guys out there listening right now, which is not a problem.
Ah,
But
there's always a bigger fish. There's always
oh
something
yeah,
got
yeah,
more.
there's always a bigger fish out there. Oh, for sure, for sure. But I just want to give flowers where flowers are due, and he's motivated not me, but also Paul as well and others out there to get on as the SCHD journey. And if you're scared or if you're kind of timid, don't worry. We're all here buying it every single week. Come on and join us. We're on Twitter. You can go ahead and give out your information for Twitter and any type of social platforms you have. Go ahead.
Yeah, it's SCHD ETF on Twitter and Instagram, and I go by the handle SCHDStan. My name is Craig. I can't remember if we said that or not, but yeah, SCHD ETF on Twitter and Instagram. That's about it right now.
Awesome. And you guys know it is your boy, the Dividend Dog. We are here on the Investing on a 9 to 5 podcast every Sunday morning, bringing you guys the hottest dividend news and some updates on Paul's Amazon FBA, his options income. So we will catch you guys on the next video. We're out.
Thank you
See
so
ya.
much. Thank you.